I believe the S&P will rise another 15% by the year end. I think that this rally has legs and it's going to continue to maintain its position for quite some time.
It's a soaring summer in the stock market, but it's not over yet. Our analysts are tracking some of the hottest stocks of the summer where they believe the rally has only just begun. Let's dive in. Welcome back, everyone. Investors have plenty of reasons to celebrate this summer, with the S&P 500 reaching a new record high this week, climbing 15% since the start of the year. While some may just want to celebrate the bounce rather than question it, Thomas, we should talk about what could be behind this continued summer rally. So tell us about this.
Right, there's a couple of things in play right now, and one of those things is the upcoming election. That has an impact on trading during the year leading up into it. Oftentimes the market will finish the year up. It usually rises after the election. The big question is what happens in the first 9 months of the year, which is oftentimes a lot of volatility. So we are up pretty good right now. We could see a correction before the election comes. That kind of plays into some of the other things I'm looking at. But right now, what's driving the summer rally is the inflation and the FOMC outlook. The FOMC has kind of walked back on their plans to cut rates as aggressively as they said, but they're still on track to cut rates. The latest inflation data aligns with that outlook. So what the market is looking at is an economic pivot that should lead to accelerated GDP growth and accelerated earnings. We've already got an outlook for earnings growth with the S&P 500. So those two things are providing a carrot and a tailwind for the market to lead it forward, push it higher.
Now, with many stock prices at an all-time high, and yes, as you mentioned, that election that is on the horizon, Chris, should investors just wait out this summer rally, or are there still some opportunities to maybe cash in on this climb?
Well, I'll start by saying it doesn't really matter what I think investors should be doing, because I think they're clearly showing that they're willing to climb that wall of worry that Thomas has talked about so much over the past couple of weeks. But having said that, I do think there are some opportunities that exist. You have to start in the technology space. This is a good space to be in, whether you're a long-term investor or whether you're just looking to trade the market right now. This is where all the liquidity is. This is where the juice is for the market. So if you're looking for short-term trades, certainly you're going to be looking at the technology stocks, the Magnificent Seven. Again, that's where the action is. It's also a good space to be in for the long term. However, and we talked about this a little bit, Lacey, you know that I'm more of a long-term focused investor. This is also a good time if you're looking to take a long position to focus on sectors that might be trading at a discount right now. We're talking about energy stocks. We're talking about consumer staples, and Thomas brought up a really good one in a previous video that we did. This is also a good time to be looking at consumer discretionary, because when the Fed cuts interest rates, that might relieve some of the pressure on the consumer and free up some of those discretionary dollars. And if you're really having a little bit more of an appetite for risk, now might be a time for you to kind of dust off some of those small cap stocks on your watch list and take a close look at them, because the small cap sector, the mid cap sector, those are probably going to move much higher once interest rates get lower, and those companies that are so reliant on capital maybe get a little bit easier access to that capital.
Yeah, those are some great sectors that we're going to be looking at. And I also want to talk about what specific stocks maybe investors should consider buying this summer. We'll hear your picks coming up shortly, but first, here's a way that you can get alerts on what is going on the market in real time. Want to keep your finger on the pulse of the market? Text the word YouTube to 68285. That's 68285, and get free breaking news alerts from MarketBeat for the stocks that matter most to you. Don't miss out on crucial updates. Stay informed and stay ahead. All right, Chris, Thomas, let's move on to your top 3 picks to take advantage of this summer rally. I have a feeling that the AI industry is going to top the list here. Let's hear it.
Well, right. So Chris, a minute ago, mentioned the Magnificent Seven and tech stocks. And at the top of the list right now is Microsoft. Microsoft is for the quarter, it's the #1 constituent of the S&P 500. It's part and parcel to why I believe the S&P will rise another 15% by the year end. And this is driven by AI and the cloud. When it comes to the stocks that are performing the best right now, it is the blue chip market leaders, industry leaders. And the themes in the market right now is AI and tech. And Microsoft is the blue chip industry leader in tech. It's not a chip stock like NVIDIA, but it is a leader in providing AI-powered services, but also in AI infrastructure for the rest of the industry. The last earnings report was awesome because of all of the major cross-cloud partnerships that it's forming with companies like Oracle and Google, which cements the idea that the Magnificent Seven, the top 7 largest market cap stocks in the S&P 500, will continue to move higher because they're the ones where all the AI money is going to. They have the scale and the size and the power to follow through, and that's where business is going with their money.
Now, obviously, as you mentioned, Microsoft is doing well, but with so many new competitors in the AI market, is there a chance here that Microsoft's 12-year streak as a golden tech stock for investors could be coming to an end?
I really don't think so. And it just goes back to what I said before with AI in the cloud. Microsoft is a leading player. And in the cloud specifically, it's emerging to be head and shoulders better than AWS and Google. It's getting the most growth, the fastest growth in cloud infrastructure. I think that it has really entered a new game for itself. It's reinvented itself again. I think that this rally has legs and it's going to continue to maintain its position for quite some time.
Yeah, and don't forget that analysts right now are really bullish on Microsoft stock. I mean, I think it's gotten at least two upgrades in the past week. I know one of the price targets was 550. I think the other one might have even been a little bit higher. So analysts are bidding the stock higher, which is telling investors that they're expecting solid earnings from this company going forward. This is a safe bet for any investor.
Well, absolutely, because just the other day, one of my posts was the 6 reasons why the S&P 500 will rise this summer. And it's all because of these top 6, top 7 stocks, these tech stocks leading the market with AI. They're all being led higher by the analysts. They've all got a 15 to 30% upside. So my target for 15% S&P 500 could be low.
So is this the only AI stock on your list, or are there others that will top the market this summer?
Well, I think there are some kind of sleeper plays and some plays that investors aren't really looking towards. And inside the chip sector, especially, one of the ones I'm looking at is Broadcom, AVGO. They've got a great position with embedding AI into devices, especially with Apple. And I think that they will have a market leading position for some time to come.
So with 43% growth in the last year, it's easy to see why Broadcom is one of your summer favorites. But it does come with a hefty price tag. We're talking over $1,700. The company did announce a 10-for-1 stock split is coming in the future. Chris, is it better for investors to get in before the split, or should they wait until the cost of entry is more attainable?
Okay, so let's remind investors that a stock split's really just a mechanical move. It doesn't or it necessarily shouldn't affect a company's overall valuation, but what it does change is how investors feel about a stock. And that certainly has been the case. Broadcom announced their stock split, I think about a week ago. I think it was around June 12th or something. The stock's up about 20% since then. That's the effect that a stock split can have, because investors believe that you're going to see higher earnings, you're going to see higher revenue, they're bidding the stock higher. Now, should you get involved? What you have to think about is, do you believe the stock's going to go much higher than it is prior to July 12th? I think that's when the stock split takes effect. Right now, that's a pretty big gap to fill. I don't know if Broadcom's going to go higher. I'd be looking for a little bit of a pullback, but I certainly could understand if an investor wanted to chase it a little bit higher.
Right. I agree with the buy the dip outlook. Broadcom is trending higher. It should continue to trend higher. Like Chris said, the split really just affects sentiment. It increases ownership to some degree. But I want to point out that NVIDIA just completed their stock split. We had the same outlook, kind of wait to buy the dip, maybe have a dip after the split, but it didn't come. That stock is still rocketing higher. Broadcom could do the same.
So it's no surprise that 2 out of 3 of your summer picks are from the booming tech industry. Thomas, is AI the only way to go this summer, or are there other industries that are still expected to continue climbing well past election season?
Yeah, there are plenty of big major blue chip players that are leading their industries that are firing trend following signals and are trending higher right now. One of the ones that I've been looking at is Casey's General Stores, but there are some other ones. I know that the GLP-1 craze is really big, and that's driving a lot of those stocks higher too.
Well, while consumer excitement may be bolstering this bounce in the weight loss market, there are plenty of arguments against these drugs. We see those day in and day out. Some are saying they actually are causing a shortage in the materials needed for more critical prescriptions. Do either of you foresee any potential regulatory changes down the road that could maybe impact the company's continued market growth?
Boy, the only one that I could see, Lacey, would be if health insurance companies decided for whatever reason that they weren't going to cover these drugs, because these drugs come at a significant premium to existing diabetes drugs or other obesity drugs on the market. Weight loss drugs are not necessarily a new category, nor diabetes drugs. But so far, insurance companies, including Medicare Advantage companies, have shown no reluctance to cover these drugs for the patients that need them. And I think as long as that's going to be the case, I don't see really any slowdown in this market.
Yeah, I agree with that, because it seems like these drugs are becoming a preventative. They're a treatment for conditions, but also a preventative. And if
Right.
they prove to be effective as a preventative, I guarantee you that every insurance company will cover them and they'll become a part of our daily lives.
You bring up a great point about insurance covering these prescriptions. So because of this and other reasons, do you think that people are expecting this stock to continue to climb?
I do, but I'm not totally sure. So in the case of Eli Lilly, let's just talk about that, because Novo Nordisk, Eli Lilly, they are the two companies that really made a splash last year by introducing their GLP-1 drugs into the market. Both of those companies now have drugs that have a label for obesity, in addition to a drug that has a label just for diabetes. However, Lilly's been taking off more than the other stocks this year. And I think the reason for that is analysts are looking at the company's pipeline and they're seeing that they've got the opportunity to not only hit on the GLP-1 craze, they've got an Alzheimer's disease drug that it's in late stage trials. That one, that one's going to be iffy to see if it can get across the finish line, because it's just going to be, there's going to be so much pressure on those trials to produce the results it needs to produce. But if it does get that drug across the finish line, that's a game changer. They've got oncology drugs in the works, other areas that they're looking into. That's, I believe, why investors are so bullish on Lilly right now. And I think that momentum is going to continue.
There is still plenty to watch in this summer rally, and investors still have plenty of opportunities to join the ride and take advantage of these big players of the summer. MarketBeat subscribers have a front row seat to exclusive market news as we continue to follow some of the hottest stocks of the season. So drop a comment down below with your top stock picks of the summer. We want to hear from you. Until next time, happy investing.